Brian, you and I had the opportunity to talk on TV earlier in the day during Market Day Report about a flash sell of 30,000 metric tons of soy oil to South Korea to start our conversation and our morning. And I thought, if anything might go higher on Wednesday, it might be soy oil. And just didn't happen, did it?
No, it just wasn't enough of a quantity, I don't think, to get the trade excited about buying soybean oil. We're in a pretty steadfast downtrend, and that's been a market that's kind of been a darling of the spec community, at least some of the advisors wanting to be long and bullish of bean oil all throughout 2024. And as we get to the end of the year here, it's not been proven to be a very good investment. It's not been a bullish type market whatsoever. And, prices here in the low 40s could easily turn into the 30s, I'm afraid. And I think the spec community kind of realizes that. In fact, you could probably say that the spec community is just not interested in being long almost any of these grains or commodities. We just don't have that supply issue that would give us a big movement in prices. And, demand trends have been good for corn, soybeans, and wheat this year, but that's just, enough to provide us some support, but not enough to signal a rally or even a bull market.
Okay, Brian, so I also wonder, just looking at the soy complex, and we get headlines out, I think on Tuesdays when they came out, that the Biden administration would not be rolling out the details on 45Z. And that's really, I guess, the sustainable aviation fuel and the incentives that will be there for 2025. By the way, that goes into effect on January 1st, whether there's anything from the IRS or not. Is that playing any role whatsoever in some of the pressure in the market?
Yeah, I think it did when it was first announced, initial, that we saw, a fairly sizable movement on the market. But since then, it's really had very little movement for the market to absorb. And so we just haven't found anything really to give us any direction in any of the markets. Soybean oil, you thought maybe that news announcement plus the export sale would be enough to give us higher values or at least move the market. And yet we traded today inside of Tuesday's trading range. So an inside day, maybe it's a consolidation type of day, but boy, this market really needs something to give us a sustained rally, or I'm afraid we're just going to kind of drift our way lower into the first part of the year and probably even after that through the winter months.
Okay, this is year-to-date percentages. In other words, where we were the first day of January, the 1st of January 2024, and where we are today. The soybean market off 23%, wheat down 13%, cotton down 13%, corn down 8%. Any chance whatsoever? I know the chance is there. There's always a chance, right? Always a chance for a Hail Mary at the end of the game. But really, are we at a point where 2024 will probably be negative compared to where we started the year for all of our row crops?
I think the odds of that happening are very high, that we'll end lower here in negative territory. The one thing that you can point to that would give us a chance would be hot and dry weather in Brazil, because most of the forecasts we've been seeing over the last several weeks are pointing towards very good growing conditions, near ideal growing conditions. If something would happen to change, a hot and dry situation 2-3 weeks or something like that, maybe things could turn around pretty quickly, or at least give us some sort of a short covering rally into the end of the year. So you can't rule that out that would not happen, but right now, as we look at the forecast at midday, it looks very good. The rainy rainfall pattern continues without any oppressive heat, nearly ideal.
Yeah, again, it's the supply side. There's nothing there to really interrupt that. So I want to hold on to that thought as we take a break, because as we come back, we're going to try to apply that same line of thinking to the proteins. We're talking with Brian Hoops of Midwest Market Solutions, and this is Commodity Wrap. So can I apply that to the proteins as well?
I think you can. I got the tie-in for you.
Okay, good. Here we go. This is Commodity Wrap. We're talking today with Brian Hoops, Midwest Market Solutions. Hang on, in a few minutes we'll give you some contact information if you want to visit one-on-one with Brian. So in our first segment, we were focused on the row crops. And Brian, I was just looking at corn, soybeans, wheat, cotton, all lower for this year, and really the odds of them turning positive from where we started the year is not real likely at this point. However, we look at the protein side, even though cattle, live and feeder cattle in the red, hogs in the red, on Wednesday, overall that cattle market, using the same numbers that I used on the row crops, 8% year to date, feeders up 16%, hogs up 22%. So can we apply some of the same conversation we had with the row crops over on the proteins?
Well, I think we can. We know these markets are made up of supply and demand fundamentals, and at the core of everything is supply versus demand, and the market's trying to determine a price based off of that, and we discover that every day. And what makes it exciting is, things can change from a supply standpoint and a demand standpoint, sometimes very quickly, and sometimes it takes a real long time. Now, one market that is in much tighter supply in 2024 compared to the 23 year was cattle. We had much tighter numbers, much supplies. However, the weights were much, much heavier throughout the year, and that just added to the supply. But we did see some negative news as far as the demand side of the equation goes this week to the cattle complex. We saw a big drop in the cattle futures to start the week on Monday. We were higher early in the session, closed sharply lower. We tried to come back, but then again, by the end of the day, we were lower near the lows of the session. And your station there, RFD TV, kind of confirmed the rumors we were hearing on Monday that the Tyson beef facility in Emporia, Kansas will be closing. And so that's a negative demand equation. When you lose that kill facility, you just don't have as much demand. You have the same amount of supplies, but you cannot get them killed as quickly, and that less competition creates less demand from the packers. So negative from a demand standpoint, even though the supply has been relatively friendly for cattle. And even going into 2025, especially the second quarter, things should get even tighter.
It's actually a conversation we were having yesterday on the show with Troy Vetterkind. With the Cargill announcements of reduction of about 5% of their global workforce, how much of that would be tied back over to possibly the processing sector for the proteins? And again, we're not real sure what's going to happen on that Cargill side, but the Tyson, you throw that in, packers are going to find a way to stay in the black. They have to. They have shareholders. So at the end of the day, this Emporia might not be the last one.
Yeah, unfortunately, and we need more competition. We need more kill facilities to work through some of these supplies. And certainly, to Emporia, Kansas, the local community, that many loss of jobs, it will certainly hurt the community. So it's negative when all across the board when you hear something of this news. Cattle market did not take it very favorably, and there may be repercussions longer term down the road when the market really comes to grips with the details of how many cattle we will be missing out on a kill schedule every day, every week, and where those extra cattle will end up going and how that affects the cash markets.
I'm going to make one more kind of tie back in here on the Emporia, Kansas thing. Population according to Wikipedia, which I trust everything that's on the internet, but 24,000 people. So, you rewind the clock, what was it, a little over 10 years ago that plant closed in Plainview, Texas, that Cargill plant. Population of Plainview, 25 to 30,000 people. Doesn't just affect that one community, it has a ripple effect that will actually kind of splatter out 30, 60, even 90 miles in some instances. So, yeah, a big deal for Emporia. Before we go, though, anything else that's on your radar that we need to keep an eye on?
We didn't talk about ethanol production. It was down today. That's the first meaningful pullback in about 10 weeks. And there's been two sectors supporting the corn demand, ethanol and ethanol production. We're using a lot of corn to produce ethanol. And maybe this is a slowdown. Maybe some of the plants net margins are narrowing a little bit, but they're not able to hit for the markets any longer. Along with exports have been very strong for corn. So we're seeing a lot of demand. This is a little bit of a disappointment, and I think corn kind of reacted to that with a couple cent lower price action across the board today.
All right, Brian, if we want to talk one-on-one, how do we find you online?
You can reach me online at MidwestMarketSolutions.com. We have a list of our offices around the country and phone numbers there as well. So we'd like you to check us out there, sign up for our text service, our Twitter feed, and YouTube, Facebook accounts.
So President of Midwest Market Solutions, Brian Hoopes on Commodity Wrap.